Alright, so first thing I wanted to cover was a Mara trade that someone in here took, and I just wanted to look over it a little bit and just kind of talk about it. But the other day, we are looking at this Mara chart. Let me get up to my conversation on it so I can be a little bit more accurate when I say this. So we're on this day. Let me go back. So we're on this day, and I basically kind of just cheated. I kind of just went down to the 4-hour. And what I do is I just kind of check out the daily a lot of the time to get just a kind of a cheatsy range. What I mean by that is just if I see a support, you know, like way over here, I like to draw it just to give me a good top side, and then I'll draw this recent, you know, low. So I have at least a starting range, and then I kind of focus on the candles right here on this side. Really good to go to the far left, of course, because then all this will be done for you by grabbing these levels, you know, history. But really easy, really quick, just go there real quick, and that's kind of what I did in this scenario when I was helping him. And then you could see instantly real quick, you know, we had a really good support here where price dropped, and you could see price kind of had to reach up again. So just a good level to just kind of look at. You don't have to mark it every time if you don't want to, but what I like to focus on is starting here. You know, focusing where the buyers come up off of the support. So you can see one stopped here. And again, I'm marking the tops of my days, the meat of the close. You don't really see me draw wicks a whole lot. The only time I ever touch a wick is sometimes I'll draw it with the trend line. Most of the time when I'm drawing flat levels like this, I'm not grabbing, you know, wicks. I'm mostly grabbing the meat because that's the close. That's where the buyer actually stopped before the day's trading stopped. So that's where I like to grab it at. So right now you can see I'm grabbing that one, grabbing that one. I'm gonna grab that one, that one. I don't need that one. We'll maybe grab that one. We go down to the 3-day, 5-minute. And you can see, you know, just a couple extra days behind. You can see there's a clear resistance there, you know, just to have extra. There's a good low down here. There's a good common level, you know, about right here. But without being, you know, Captain Hindsight, because this is the day he traded on, let's look at everything before that. You know, so just a couple days before. Yeah, so you can see we need to have previous day high marked. We need to have previous day low marked. It'd be really nice too if I saw more of you guys marking the open and close. If you want to color them differently, please do so, because these need to be looked at as more as pivot points. The ones are above are current resistance. You know, so prices right here, this is where you need to be seeing buyers slow down at, because after breaking out from current range, you need to be seeing them slow down. Just like when prices were turning back, lowering volume. So why I'm doing that is because these are more of like doors, swivels, they're pivot points. They can be used by both sides of the field. So you can see they were used by calls here. You can see shorts had their fun with the bear flag here. After they picked back up from pre-market low, they utilized this area again. You know, so opening price can be used as kind of like a gateway, you know, kind of just a hinge really, open and shut. And then previous day close, of course, that's going to be another really cool just BB system level that we look at just for kind of really the pivot point, what I said before. Let's look at that day though. This would be the day the trade was taken on. So the person that we were talking to, it ended up entering this bearish engulfing at this 2884. Now, what is that 2884? Where did that come from? You know, again, we're not making up levels. We're not, you know, being Captain Hindsight or anything. Where is that from? You can see it's actually a very strong level from that left side, from that recent price action. That's an emerging candle. You know, so that'd be a really good area to see buyers push price up to, have a slowdown, and then possibly continue through it or reject off of it with sellers. There's only going to be one or two directions they can go. So now we verified what is that level. You know, so now we know what that is. You always want to go back, review, why do I have that? Why was that so important? You know, so while they were trying to enter calls here, though it did have rising volume from candle to candle, so it was a good level, definitely needs to be cutting losses soon. So we're not sitting there saying that was a bad trade, you know, bad on you, because it had rising volume. You had conviction above a really strong level, so great entry in my opinion. But then you see this happen. After this happens, are you guys just going to freak out and start cutting instantly? Are you going to let the candle close and show you first? You know, because in my opinion, you really should let the candle close first. You know, so this wasn't necessarily a bad entry. It was just extra insight on, you know, more levels, you know, backing out and seeing, oh, you know, I could have actually had that level there. You know, you could have been a little more, you know, oh, I didn't want to take that because, you know, morning had already opened up. I don't really like this angle that it has going to it. You know, and then also bearish engulfing. It's at a price that I have here. The market, whatever the other extra reasons may be, you know, it's just good to have that extra insight. So make sure you guys are backing out to your 4-hour, your daily. You know, a lot of the time I tell you guys the daily, and then go down to your 4-hour and kind of mess with the levels to make them a little bit more accurate. And you can see, you know, there's not too many levels here. So you shouldn't be flooding your screen with anything, and then being able to add your previous day levels and planning for your next day. So that's what we're going to cover in here, though. We're going to go over more examples. But I wanted to cover that again for everybody because I thought that was a great example. I didn't think it was like a dumb entry, if that's what we're going to call it. No, there's not really dumb entries. A dumb entry is when you're entering for no reason, you're not letting candle close, stuff like that. Stuff that you are definitely in control of. But you're not in control of knowing the next candle is going to be a bearish engulfing. Okay, take that out of your head. You're not going to be Captain Hindsight on that. So that's why I wanted to talk about that one. The next one I wanted to talk about was Tesla. So we had Tesla on here, which I covered this with that person as well. And we're basically looking at it again. But mainly you can see I grabbed just basic levels here. So again, previous day high, previous day open. I grabbed this level because it was just a notable level. It isn't like a control point or anything. I mean, it might be. But I like that this was a good morning star here, kind of in the same area that this continuation happened. So where I see volume sitting here, there's more volume sitting there. So just another notable level. Don't always need to mark that kind of stuff. But if you ever see a really long extended day, very nice to mark those kind of things just because you can see very clear notable level of resistance here used multiple times during the day. So just good to mark that for your next day's price action. So planning for this day, adding that. So we have all of our BB system levels, seeing our PML, our PMH, previous day high, which is also our close, previous day low, which is also our open, so we don't have those two extra levels there, and then that extra notable level. So nothing really serious about that. Let's start over, because I don't like to be Captain Hindsight. And as I'm talking through this chart, this is how you should be talking to yourself while viewing the chart. While you're sitting there reviewing or visualizing something you traded or didn't trade, it doesn't matter. You need to be kind of talking to yourself, visualizing what happened on the chart, just to kind of give yourself that routine of just really reviewing it, giving yourself that muscle memory. Over time, to be something big, but the big level we were watching, though, for the break below was 909. You can see I ended up with that level again. You can see rising volume within the first 15 minutes, so I don't trade the first 10 minutes. You guys shouldn't either. And anytime you're trading in the first 30, you need to be definitely trying to scalp more than day trading. And by what I mean by that is you need to be trying to get to those first targets and getting out. You don't need to be trying to trade these too long. Definitely learn to hold trades longer or try to take trades farther, but don't do that at first. Focus on just getting it to that first base. You know what I mean? So here we have rising volume, posted on the list at a lower level, so I think I was just being passive. But as you can see here, though, we ended up updating it in that channel, Bueller's channel. We said rising volume under, blah, blah, blah. We end up getting a rejection with an indecisive candle, has lowering volume. Next candle drops, has rising volume. Awesome. All right, so if we're in any kind of scalp, we're definitely looking to take some profits. Overall, if we're in a day trade, we want to try and see how far this can go before cutting it. Let's say we are wanting to hold this. Where are we going to cut this? We're going to want to cut this probably where we entered, pretty close to about where we entered, or at least the control point of where we entered. So it'd be about where that indecisive candle is, somewhere in here. So if you see it pull up to that, or you see strength pull up into that, it's good to get out, or if you see weakness on the downside. So let's check out what happened after that trade, or after the movement down. You can see for 5, 10, 15, 20, 25, 30, 35 minutes, we held the same low. So regardless of this being a bearish rectangle, a bullish rectangle, dip by dip, rally base rally, regardless, what are the important levels in this chart? It's going to be right here where we entered for the downside movement, and this base level right here. So we now know our range. We now know wherever this exits is the direction. So yes, we could have been exiting if we were in this for a longer day trade. Because we saw that there was a lot of weakness here. We see rising volume on the buyers. We see there's a lot of candles holding the same low. So great sign of weakness to get out of this trade, especially if you're trying to look for continuation on the short side. Now let's look at reevaluating the chart. What can we do next? Now that we have our range, now that we have a base, to start at, what can we look for? We want to see a rising volume push over this 9, correct? And we want to also see a push through this level. I only see one opportunity here, and I'm not saying this because we did actually post this in chat, but there was one push here, and which pushed up and ended up hitting that 914, 915 area. And then after that, I didn't really end up looking at the chart because Fed was at the end of the day, so no need to just sit there and stare at your charts all day. Don't kill yourself looking at this stuff. But overall, besides this and this, I really didn't see any amazing trades. Now let's review. How amazing are these trade opportunities? They're not really that amazing. There's one quick trade here, one quick trade here. And you could see not a whole lot of movement. One was early on, one was a little more, not as early on. But besides that, there really wasn't amazing opportunity until the later on in the day when the Fed and the craziness, because you wouldn't have been able to trade this with accuracy. This would have been pure Fed pumping stuff. Everything moving crazily, the market going crazy. So it would have been very hectic on you. And to say that this was a reasonable trade would be crazy to say, because just the volatility that was happening, all the craziness that was going on. So you're not going to want to be able to say, yeah, I calculated that play, blah blah blah. Yes, there's definitely still reasoning and the levels here and the push and all that. Don't get me wrong. But very hard to catch these types of trades. So please focus on just hitting those base hits at first and then going from there. But what was the next ticker I wanted to look at? If you guys have any questions, please drop them in there, and I'll try to get them to the end. I just kind of wanted to go over a few tickers I had planned out, and then we can, of course, talk about anything you guys want to. So this next setup is Netflix. This setup is, and again, this was not called out in chat. I'm again just going over a couple of setups that I thought were really interesting from today, because of course, after kind of the first couple hours, I really didn't look back at the market until the very, very end when we were just looking at what could be swinged or what was the Fed saying, all that good stuff. But these are really cool charting examples that aren't impossible to see, so going back to Netflix, let me clear all this. Let's get our range going, just like I said on that very, very first chart, like on Mara, getting my range. So I see there's a pretty good low here on the 4-hour, and I see there's a pretty good high here from, the top. You grab your control point, you can do all that stuff, but I'm just going to grab basic levels today. And we end up grabbing our first buyer push. We could see we had base here, end up pushing up, and this was really our first push above the 9 was right here. So I'm going to mark that. Pretty good start. I see the next one's above here, the next day's close, and the next one's up here. Just because this is pretty big, I am going to draw that one, and I am going to grab the control point of this candle because of the range. I don't always do this, but very, very big range right there. So I do want to grab that. Remove that, auto zoom. Go back to just kind of where we are, and I could see, all right, kind of pushed off that, made our first high, came down, simmered, and look where we're sitting on right now. That first resistance that we ended up hitting. So pretty interesting level right there. And again, just reviewing the price action. Doing this over time, of course, is going to help you immensely. I notice every time I go to the 3-day, 5-minute, you can see I'm just kind of focused on the past couple days of action when I go to these smaller time frames, because sometimes you're only going to need this. You're going to be like, all right, well, that's all I need for the initial range. Previous day high, previous day low, pre-market low is about, oh yeah, we got it. And so some days you'll only need this, and then some days it's nice to kind of look back and be like, oh wow, if I would have just looked over to the left a little bit, seeing this notable level. I'm not going to make up any level that just doesn't make sense or you wouldn't be able to see, being able to point out levels that make sense. You can see there's a clear range right there from 2 days ago. And then from 3 days ago, is there anything else that we see that isn't already marked? I see kind of a continuation there, kind of a continuation there, but nothing really crazy. So I'm going to move on from that. But to check this out though, if you ended up marking that day's close, this is one thing I kind of capped in hindsight. That's why I'm pointing that out to you guys. Check this out. That's where it ended up holding as the rounding bottom, because no, you would not have seen this level, but regardless of not being able to see this level, you still should be able to spot that there is a pretty strong rounding bottom right here. That's an amazing pattern to see for bulls. Anytime you see that for the top side, we always call them head and shoulders, all that good stuff. They're just longer head and shoulders, really. It takes a lot longer, a lot more price action, a lot more strength in buyers, a lot more fighting, as you can see, because you have to go up, down. It's just a lot more price action. It takes a lot more time. You can see it took all day just to get it around here again. But what are these kind of plays draw? Does anybody know? Does anybody know what kind of plays we can pick up from this after seeing some sort of reversal like that? Just seeing that big rounding. What does that kind of get you warmed up to seeing? Does anybody know? And again, we're not making anything up. We're always going to follow strategy. So if you've read the BB quizzes, the BB, strategies channel, sorry, you'll know exactly what I'm on, or some of the videos. Exactly, Forbidden, buy the dip. So regardless, I don't have to be a genius in patterns to know that this might lead to reversal. I just need to know the chart's kind of warmed up a little bit, right? I don't need to be a guru or anything, right? So what are we looking for above the 9? Volume, exactly. We're looking for a candle close and volume. Remember, candle close is very important. especially when you're day trading and scalping, 'cause that's kind of today's focus, is day trading, scalping, just quicker plays, looking at just minor levels, basically from the smaller price action. Again, I've basically only shown you the 4-hour and then the 3-day 5-minute. I really haven't shown you, a crazy amount of stuff. We've just looked at some basic stuff. But yes, correct, volume. We're going to look for a candle close with volume. So, and again, like I said on the Tesla chart, you probably wouldn't want to be actually taking these trades at this time because of the Fed meeting, or the Fed statement. Sorry, I keep saying meeting. The Fed statement that came out. So people were anticipating that. So of course there's going to be some craziness coming after that. So you're not going to want to trade this time. And if you are, what do we do anytime we're trading in a more crucial time, or things are more pressured, or we don't feel as confident in it? What do? We either sit cash or we trade light. We don't do anything crazy. And honestly, right now, like I said many times before, you should only be trading with one contract. You should only be going with one, or paper trading or mentally trading, until you're more confident with the system, or how you enter, how you exit, how you visualize. All right, once I've entered here, I'm going to stop out here. This is where my target is. And it's a lot. I'm not going to sit here and be like, guys, oh man, you do this in a week, you should already be a pro. No, hell no. All the people that are still around me from months ago are, and I'm not making this seem like they're slow, are just now growing up to that next level, feeling more confident, seeing how they need to, continue onwards. It's not something you just pick up and you're like, all right, I'm done. It's a continuous battle. Anybody in this chat that's been here for months will tell you that. They will tell you it is a continuous battle. But yes, let's get back to it though. And again, I point out that stuff because I don't want to sound like other traders who run groups, because everybody will sit here and tell you, oh, you could have done this, you could have done that, but you won't want to always be trading. Like right now, you wouldn't want to be trading during this time. So don't always review these charts thinking that stuff. Be realistic with yourself. But price action wise, let's focus on that. What's moving on here? So you see, there's a pretty good rise in volume on this candle as it closed over. And then we can see there's a pretty good candle close right here as it closed over the exact level we have posted. So which one of you guys would enter this candle or this candle? What would y'all enter? The first or the second? One or two? Yes, everybody's on it. So I'm not going to sit here and say, yep, that's the correct one. They're both correct. They both have rising volume. But what's the difference between these? What makes this one strong and what makes this one not as strong? There's two reasons. Oh, I had a heart attack. I thought I wasn't recording for a second. It broke the pivot level. That's one of them. What's the other reason? Why is the second one stronger than the first? Besides breaking the pivot level, he got the first one. What is this candlestick? This candlestick is a long-legged, regardless of it being a doji, there's long legs on it, right? So it's an indecisive candle. We know that it's important, but it's not the one we want to enter on. Now we know it's warmed up. It's definitely got something going here, but it's not the one we want to get in yet. We're not more sure of it. We're kind of just barely confident in this. We're definitely confident in this. So remember that. Long legs. We got long legs. What happens after that? You can draw whatever lines here you want, but what did the volume do? Lowering. So this should have given you even more confidence. What do we have candle to candle as it closed over the crucial level? And again, don't just go, oh, it crossed over 394. Remind yourself, what is that level? What is 394? Why do I have that marked? Oh, it's a notable level from 2 days ago that I backed out to. So when you're doing the BB system, yeah, you're focused on that previous day. But like I said, sometimes you do want to see, oh, okay, because it's a very tight day here. There's not a lot of close price action here once it gets down here. So sometimes you do want to check this out. And again, you can see I started from the 4-hour. Something I do every day that helps me with the watch list after I've already had a couple tickers, in front of me, is I go to the 4-hour and I just kind of focus on these couple simple levels, and then I break it down just to go over the past couple days on the 5-minute. And after doing that, I have mostly every effective level I need. I'm not going to sit here and tell you have everything you need, because you don't. It'd definitely be better to take the time to go to that far left side and grab those emerging candles and then focus on what's here. But recent price action is amazing, you know. So make sure you're grabbing the right levels. That's what this stream's about today. Grabbing effective levels, knowing why you're grabbing them. Because I promise you, someone who takes a trade randomly and wins and loses is gonna feel inflated. You know, that they're gonna think they know stuff they don't. Uh, in either direction, you know, winning and losing. Someone who takes trades on levels that know when they know what they're for, why they're there, you know, the reasoning behind them, they're going to be able to repeat the same process over and over and over, no matter the ticker. Because you'll see people in chat and they'll go, "Oh, I'm only good at Tesla, or I'm only good at Neo, or I'm only good at, you know, Apple, or I'm only good at this. I'm not good at that spread or this or that." It's because they're limiting their self. They're not confident in their strategy they're in. They're not confident in the effective levels that these can provide you. You know, so build confidence in yourself by grabbing these levels. You know, it's really not that hard to grab a close of a day, you know. Do we all understand, you know, why we grabbed a lot of these basic levels here? This is a perfect example because it has that gap down, so I can focus on just this, but there's a lot to it, you know. But when it comes to the charting, you know, you need to know why. Why is this important? Well, that's a very strong close. That's a buyer close. Common resistance, you know, been rejected multiple times. This is a great start to a range. We grabbed our close of that day. We grabbed our close of that day because that's the top of the range. I want to grab that one because I see there's a pretty fat range there, and that's a pretty good buyer candle. Grab it. I don't really want to grab that level. That's a little too close. Tiny range. I know there's momentum loss right there. So what I want to grab? A control point. You know, I have reasoning for all my levels right here. You go to the smaller time frame. I have reasoning for all of these levels, you know, so make sure you have some reasoning when you're going through your levels like that. And then being realistic when yourself when you're reviewing. You know, I easily could have sat here and been like, yeah, you guys should mark 1, 2, 3 day ago close. That's a great level to grab. You know, yes, it is a great level to grab, but I don't always grab them every day. You know, that's 3 days ago. It's a while ago. So you don't always think about those things, but it is kind of cool to open them up and just look at it. But be realistic with yourself. You know, I can't sit here and be like, oh, you should have known to grab that. You know, but just really cool and scary at the same time to see that if you grab a pivot point such as a, you know, an old day's close, and then it ends up getting used as a rounding bottoms reversal point to the cent, you know, that's pretty crazy to see. But what are the other tickers I want to talk about is Coin and CVS. Those are the last two I wanted to go over. But everyone with me so far? I don't want to go too quick or go on. What's up, Pablo? What's up, VK? I haven't really been looking at the chat. I've just kind of been focused on what I've gone at. What's up, Popums? Saw a few people joined. Honored to have you all here. I'm actually really impressed we even have this many people here. 12 people, including me. And it's 8 o'clock. You guys are warriors, seriously. Props to you. And look around. You see how many people are in here? There's 11 of you in here wanting to get better. And it's not like, oh, Bueller's going to single-handedly make me a better trader. You're in here going to get better because of you. You know, whatever you want to give me credit for, I really don't care. You're in here because of you. You're growing because of how hard you want to work. You know, so the fact that you're in here alone is a testament to that. So props to you guys, for real. It really is frustrating when you see people who are lazy, you know, bitch about not growing. When you see someone complain about growing and they are working hard, I'll go to war with that person. I'll go to war with that person every time. We'll dig all day long. You know, but you gotta definitely try, and I'm really glad to see you all in here. So props to you, for real. But coin, what did I want to cover on this? Oh, basics. Let's go back and clear it. I like to go through the process, just give you guys my thinking on it. And just instantly, you know, looking at this chart, you know, going to this, what do you instantly, what's the first level you guys would draw? I'm kind of curious where y'all's minds go. Just looking at this 4 hour real quick, you know, where are you instantly going and grabbing your first level? Because I always start in the daily just to kind of visualize, like, okay, there's some lows here, there's a good high here, there's a good low here. Those are kind of the first three things my eyes go to. The highs and lows. Okay, VK said it, Sal said it. Candle touches. Okay, that's a good one. Seeing that it has multiple touches, that's a really good point to make. Or even opposite siding touches, you know, kind of like right here where it has touches on the bottom and then touches on the top. The common area in the middle. So it looks like a lot of us are kind of going to this, or highs and lows. You'd mark the accumulation range first. Okay. But like to mark more levels near current price, usually depending on the ticker, about 10% up and down. Okay. Definitely not any bad answers. No one's wrong in here or anything. I just kind of was curious where y'all's minds go when you look at this stuff. Certain people instantly go to looking like, oh, there's a candlestick pattern there, blah, blah, blah. You know, some people see it how most of us in here did, you know, just kind of seeing this range here, seeing that high, seeing that low. That's what I'm going to focus on, just the basics. So I'm not going to mark it on the daily, but a lot of the time I do like to just kind of give myself that kind of just aid, really. Just like, okay, these are kind of the 3 levels I want to focus on. Maybe even, you know, maybe even that right there, just to kind of remind myself. But then I go down to the 4 hour where I can make it a little bit more exact. And you can see right here I'm way off. Those are to the wicks. I don't like that at all. Meat to the bone, remember. And you can see I want to find the lowest meat right there. So that candle right there is the lowest close. There's not a single candle that's red or blue, doesn't matter, but there's not a single candle that's a seller closing lower than this. That's a pre-market candle, pre-market, after hours, pre-market. So I don't see anything lower than that. So we're going to mark that. It also helps to mark a couple more higher up. So if you see, you know, one that's just like right here, it's just a little bit higher up, go ahead and mark it. Definitely not a bad idea, you know, just to give it to you. But I'm gonna have that marked. You can go up here, you can readjust this level. You can see I'm actually a little bit off, just to mark that because that's the highest we pushed up to. Then we kind of had a 3-bar play, get rejected from. Auto zoom back out, and again go down here and just kind of adjust this level here. So you can see I'm a little bit off, just the meat of that low right there in that seller candle. And then now that I'm focused right here, I can see, all right, I have a clear range right here. I can grab a control point, I can start doing all that junk, or I can just instantly just start grabbing a couple levels that I'm familiar with, and then I can go to that. So whatever your process is, you know, grabbing control points, doing it that way, or if you like grabbing emerging candles, be my guest. You know, both are very effective. So marking all of those, and it does help to kind of zoom in, you know, zoom in and like, okay, I am a little bit off. That one's on. Oops. You can see I am a little bit off on some of these, like that one. It's a little bit off. But just zoom in sometimes, give yourself that help. It also helps to have, whoops, sorry about that. It helps to have multiple time frames. You can see I wanted to see more of it here on the 360 day, but now I'm on the 30 day because I just want to see what's here. And then, you know, trends. You know, one thing that definitely messed me up, and I took a loss on this. I'll show you guys exactly why. So I liked that this candle pushed down with rising volume, and then my entry was going to be this day. So I wanted to see this day reject the control point of this day. It did exactly that. It even had lower volume than that day. So looking really good on my part retest wise to go down more, right? But one thing, and I don't always do this, is I did notice something very open to me, very apparent after I reviewed. Of course, it's easy to see what you did wrong after you did it. It's easy to be Captain Hindsight, but you got to be that person sometimes to just kind of review. So what do we have here? There's a pretty basic trend line that I could have grabbed from this candle at this low, because again, I already have this level here. It's not like I'm making that level up. And then we have this touch here, right here. So kind of focused on the fact that these two touch and that this pushes. This could have actually have saved me from this trade, seeing that it failed to actually close under that. If you go down to that time frame again, you can see I actually failed to close under that at all. I perfectly tested it, if anything, with lowering volume on the 4 hour. So you want to always see rising and the sense on the 4 hour, but just kind of extra note there, seeing it push down to that trend line with lowering volume. So that could have saved me, you know. So me going back and reviewing, like, oh wow, you know, I could have saved the money I lost on coin by just marking that trend line, seeing a little more effective. But that's on me. I didn't prepare enough. I didn't go to the 4 hour. I just kind of grabbed my levels and said, all right, looks good. But I definitely could have done a little bit more digging, as you can see. So we all live, we all learn. But having all my basic levels, let's go look at the price action now. It's at our BB levels. We got our previous day high, previous day open, a notable level, which is also previous day low. Notable level because you have that push, and you can see a very clear squeeze that kind of happens right there before it pops up. Came down, and this is where it decided to hold, which is actually almost that pre-market day. You can see an important pre-market level right there. So good to have that marked. Have previous day high marked, which is also the close, previous day low, which is also the open. So now we're kind of focused on today's price action. Again, just kind of reviewing this with ourselves, repeating it back to ourselves. What are we looking at? Why do we have that? What's this? What's that? What's happening? Review everything. You know, so we can see, just like everything basically today, very, very indecisive open. And I think I even posted this earlier this morning before it had popped, but I don't think I had coin on the list. But either way, let's look at the volume. And again, very big candles. But what do we have after the squeeze pops up? We have basically a bunch of retest here, a bunch of wicks to the top downside, we have a bunch of rejections to the top side, really no direction yet. And then after that we get our first close out of the squeeze with rising volume. So again, great entry point, but again, we're not entering here. Based on how we trade, this is not where you want to enter. This is very early. If you want to enter here, this needs to be looked at as a scalp, because remember, you're still under, guess what? Previous day high and close. You're under another notable level, so you want to see these first two taken as well for a more passive entry. So again, gauging your strengths. What is this? An aggressive entry. I'm not going to sit here and tell you it's a bad entry. It's a great entry, but it's an aggressive entry because it's early on. You're still under the range. You might be out of the first battle, but you got a couple more ahead. What do we have after that? The next candle slightly gets to it, maybe closes over it. We're not going to say, but it gets to it. Has rising volume. Next candle has rising volume. Another push. Has rising volume. What do we get after that candle? We start getting weakness. Again, we're not going to sit here and say, whoops. I'm not going to sit here and say this should get you out of the trade. No, you're just pointing out weakness. It's getting a little bit more weak as it's accumulated this high already, right? What happens after that? Rising. So you get one more push, right? Finally get your first red candles. All right, after that happens, what are we doing? What do we do after we get our first slowdown? We want to mark our new high of day. Should we treat every level we mark the same, like PMH, same as previous day high? What do you mean? Like every level can be used as an entry, an exit, a stop loss, a target? Is that what you mean? Yes, 100% yes. That's probably the greatest question that's been asked in here. Yes, 100%. A lot of times in my videos, sometimes in the course, a lot of times in the stream, which I know you aren't able to catch all of those. A lot of people aren't able to. But regardless, I lost my train of thought. That's what I was getting at. Regardless, though, yes, every level is effective. You know how I was saying the open and close are like pivots? We kind of use them for both. Just kind of see them for direction. It's going to be the same for all those other levels. All those other levels are very, very strong entries, exits, targets, stop losses. We use them in unison together, and we navigate with volume. That's all we're really doing. So you're grabbing levels of price action that make sense. We have reasoning for all of them, and you're navigating between them with volume. The 9 EMA, I haven't even mentioned once, by the way, besides that Netflix chart. This is guidance. This is just extra help, really. The only EMAs I really like are the 9 and the 21. And if you're looking at the daily time frame, I do like the 55, the 100, and the 200. But again, guidance. They're not the first thing you should look at. Let's look at my last example, and then I'll cut this recording because we're already a little over 30 minutes on it. But we'll continue streaming and talking about charts and stuff. But I want to at least get this recording stopped. But basically here on CVS, what did I want to cover? It had to have been small price action because, yeah. Okay, I think that's what I wanted to cover. I think I was just wanted, on this example, I just wanted to cover the cool examples of price action. You can see I have a close marked, I have a high marked, which ends up, lining up here. So we have these two levels here, the close, the low. You can see we're just trading up this small little uptrend, and each time we keep building a higher low. So today's low was still higher as well. But also, you can see how today's price action would have helped you on CVS. So we have a couple levels up here, a couple up here, from this open, from these highs, all that great stuff. And then today's pre-market, you can see pre-market highs about right there on that tick. And then the first 5 minutes, we get a pop over with lowering volume. It goes up to that level, it rejects. Price comes back down. No significant volume to break here. We have pretty good volume for a buy the dip type play here, but it was just cool, kind of seeing the lowering volume move up to the, resistance, seeing it have lowering volume to the trend line again as it rose up again, so just showing you it is basically just bouncing in between. And each time it goes up towards it, you see lowering volume. Each time as it breaks these common resistances, it has volume. Each time it gets to these supports, it's trying to lower its volume. So you can see it's bouncing continuously between there. So I don't think I had an actual example on that. I think I just was fascinated by how it just continuously traded with the levels perfectly, even between this range right here. So you look at the daily and you're like, oh, that looks like crap. It's squeezing. But you go to the smaller time frame, you're like, oh wow, there was a lot of opportunity here. But I'm gonna cut the recording here. We'll continue to cover some more examples.